Hi there, this is Nancy with Lock Rate Mortgage, and this is your Fast Mortgage Insight. Today we're going to talk about how to get the best mortgage rate. Aside from calling us, there's a few things that lenders look at, such as credit, the equity on your home, the type of home, and how you plan to use the property. So let's break some of those down. Number one, your credit score. Lenders are looking at your credit rating to determine risk. The tiers usually vary depending on the program you're applying for, whether it's a government loan, conventional, or non-QM. Each tier has a slight pricing adjustment, so the better the credit rate, the better the rates and costs is. For example, most common conventional loan top tiers is about 740 plus credit scores, 720, then 700, and on the lower side you have 680, 640, and the minimum to qualify usually is 620. Number two, your loan to value, which is evaluating the equity. So for a purchase, this is how much you need to borrow divided by the market value of your home, or for a refinance, this is how much your loan amount is, including any first or second mortgage, divided by the market value of your home. So the lower the loan to value, the better the rate and cost will be for you. For example, on a purchase, the more you down, the lower your loan to value, so the better rate and pricing it will be. And a good example, if you're downing the minimum 3 to 5%, the rate and the cost will be slightly higher. Or of course, if you down the higher end 20% or more, you'll get a better rate and better cost options. Typically, the best combined loan to value for refinance is when you get to the 60% loan to value. The next tier is usually about 65 to 75%, or the minimum is 80% loan to value for a primary home. And usually for investment properties, the loan to value minimum requirement is about 75% for a refinance. Number three, did you know that typically the type of home also affects your rate? The standard single family home will get you the best rate. For a condo, you will still get a good rate, but sometimes there will be a slight pricing adjustment. For manufactured homes, we'll have a slightly higher rate and pricing, versus a multi-family home, like a 2 to 4 unit, will have a slightly higher pricing. Surprisingly, on number four, many people didn't realize that the use of the property also affects your rate. So if you plan to live in the property as your primary home, you'll usually get the best rate because they'll assume that you're probably going to keep the home for a longer period of time. Opposed to a secondary home, rates and costs might be slightly higher. Or of course, if the subject property is an investment property, then the rate will usually be higher. Number five, the type of transaction. Are you purchasing the home or are you refinancing for a lower rate and payment? Rates will be much better in those scenarios, whereas if you were to do a cash out refinance, rates have a slightly higher adjustment. And lastly, number six, your lock period. This is how long you want the lender to honor your rate for in the current market, meaning that the lender is taking a bet that they offer you a specific rate now, and they hope that by the time you close your loan transaction, the market will not have drastically increased when they resell it on the secondary market. And if it does, they'll take a loss. The longer you lock a loan, the higher the cost. So in a refinance, you can lock it for a minimal time needed, then you're going to end up getting a much better rate and a lower cost. Therefore, it's important that you work with an efficient lender like us that will move your loan along quickly to help save you money. Now, on a purchase, my recommendation for the lock period depends on the market. If you're in a hot market where rates have been dropping, then hey, it wouldn't hurt to leave the rate floating while you're shopping because, we know it may take some time to find your ideal home. However, in a volatile market where rates have been on the rise like now, it might be wise to lock your rate in while you're shopping, especially if you're serious about buying right now. So for example, here at Lock Rate Mortgage, we're able to lock in your pre-approved loan for 120 days or even at 180 days if needed. With a small pricing adjustment, which allows you to continue shopping for the next 2 to 3 months, find your dream home, at least with the peace of mind knowing the rate and the estimated mortgage payment, opposed to waiting 4 to 6 months to lock your rate, which by then rates have gone up and now you qualify to purchase less. If you're not sure about these scenarios I mentioned, please don't hesitate to reach out. I'd be happy to price out options. If you have any questions, feel free to comment below. And that has been your Fast Mortgage Insight. Please don't forget to like, subscribe, and ring that bell for future notifications. Thanks for watching. Bye.